Today's High Performance Podcast is brought to you by Josh Phegan Digital. It's the only place to track and keep yourself accountable by looking at all of the essential numbers, from buyer appointments, market appraisals and listing appointments, to listings, sales and income, and working in 45-minute sessions. You'll find it all on Josh Phegan Digital.
Welcome to High Performance, the podcast featuring Josh Phegan and Alexander Phillips. Alexander, there is no doubt that we are at the end of the first quarter. This is a big milestone for a lot of agents. They've kind of seen some pretty choppy conditions when all of a sudden things have changed. We're into all the short weeks throughout the course of April. If you're an agent right now and you have a look, and maybe you started a bit later in January, February was okay, rate rises came, another one came in March, and all of a sudden you didn't navigate the conditions as well as you could have. So maybe you had some listings on board that didn't sell, maybe you didn't bring enough listings to market as quickly as you could have. What are some things that you could do to snap back into reality to make this second quarter, a good recovery quarter, but also too to get you back on track?
Yeah, thanks, Josh. Thanks for having me again. I think something that we actually had a team meeting around this yesterday, looking at our figures for the quarter and everything, and looked at what we did really well to stay ahead of what the market was changing. Some of our markets we sell in, we do such a wide variety, have dropped 10 to 15%.
Yes.
And that just started changing rapidly.
Yeah.
But we knew that was happening. So, our intensity ramped up on lower price guides, more vendor management, educating vendors, more face-to-face meetings, being relevant on, what's happening globally, making sure that they knew that, that was going to change, the market. But I think, if you're ahead of what's happening, you're always going to be, ahead of the market and sell more properties and whatnot. But I think something that we did really well this quarter is there was only probably about 5 or 6 properties that we took off the market. They've only just started coming off now, where we had a lot of stock and were able to make sure that we sold probably 80% of the stock. And what that actually did was remain super positive and optimistic, and we were in listings, in vendor meetings, although we're giving them a reality check, we're still super positive around the market and whatnot. So I think for a lot of agents out there, listening to this today, they're probably in a really negative headspace, I would say, and that's going to show through in your work.
And what
day-to-day work, you're going to be quite negative on who you speak to, how you deal with everything. Then you come across an agent like us who come in and okay, but you should be doing this. It's going to be quite hard to compete. And I think the other thing is there's a few listings even this week where we've said they want 9 mil. We said for a 7 to 8. If you're not willing to do that, go with the other agent. Come back to us later. We're actually having these hard conversations at listing appointments and getting the guide prices right early, so you don't have to come in and battle it later. That's probably what we've done really well this year. And also we've had a full suite of different ideas of running. We ran 34% of properties to auction. We brought auctions forward. We extended auctions. We did vendor bids at auctions. We did 5 or 6 different sort of components at auctions that made sure that we got a lot of property sold.
And what I'd say to you is that a lot of people don't think that when interest rates are in a position that they actually go up, that reduces borrowing capacity. If you think about that, maybe 2 interest rate rises, it's about maybe circa 5% less money that you can borrow right now. That is obviously going to have an impact. And if we're going to go another 1 or 2 throughout the course of this year, maybe there's 10% less that borrowers are going to be able to borrow. So if you're in a position right now that you're an agent, that type of information to your vendor is a really important conversation. And if they're saying, we just might wait till later this year, Alex, I actually think that right now is the most amount of money that any of the borrowers are going to get in the foreseeable future. So this is absolutely the time to go to maximise sale price. But mate, where's the opportunity here? Because if you're buying up, some of those properties that are in the more expensive price ranges have come back a little bit more. The changeover costs are a little less. And so naturally off the back of that, this is a fantastic time for people to be upgrading and getting into a better quality asset. And potentially with changes on capital gains tax, you might see some people change and maybe sell an investment property, sell their home and buy a better principal place of residence to be in a tax-free environment, right?
Yeah, it's absolutely best time to do an upgrade, providing that market that you're upgrading to has changed, which we're seeing it. Sometimes the market gets segmented, but we're definitely seeing changes across the board. So I think that's, but you've got to have the risk appetite to do that, but to avoid getting caught out yourself first, obviously.
And the big thing is that I think about volatile, uncertain, complex and ambiguous, the VUCA world. Go on the other side of that. How do I be stable, consistent, simple and clear? So this is what we're doing now given the conditions of the day. So whether or not it's an extra midweek open for inspection, or whether or not it's a change in price guide, or whether or not you're pushing out that auction date, we need to make sure that we've got consistency and clarity about what we're doing right now to actually get you into a position that you sell.